What's going on, good people? Welcome back to the first episode of Backtesting with Ty. The only way to get better at something is to put the practice in. So today I'm here to do that. We have about an hour and a half before the market opens. So let's go ahead and get a little practice session in. I just want to come here and put my back testing on display and actually start sharing it the same way that I share my live trades. So let's go ahead and break it down and get right into it. So let's see. All right, so this is what I like to do when I go back and back test. Basically, what I want to do is I want to run a dress rehearsal of what I would do on a normal day when I come in and trade the market open. So I pretty much try and run it down the same way as I do when I trade a live session. So here's the list of things that I like to do in my pre-market analysis. First thing I want to do, find the closing price from the previous session. So I like to go to my simulator. I use Trading Sim. You know, they don't pay me, but if they want to, it's all good. But this is who I use. They let you go back for about 3 years into the past, and you can go back and back test any futures pair that you want to. You can pick whatever day, whatever time frame. You can take the speed. You can do it on normal. You can do it on 2 times the speed, 3 times, 5 times, a minute per second, 5 minutes. Really, the possibilities are endless. It's very, very helpful and useful. So that's what I'll be using today. So what I like to do is just go back to a previous day and just go from it. So this is the last day that I was trading. This was February the 17th, 2021. So we go back and find the closing price from yesterday. We already have it marked up today, so we can go ahead and move forward. So that closing price is going to be 31,551. So then let's go ahead, move on to the next day. Let's bring it out to 930. Well, 928. That's good enough. All right, and then what I do is, next step, compare the price from the closing price to the London sessions open. So for me, I classify the London session as opening at 3 o'clock most of the time. That's what I like to use as my benchmark for the London session. Now, some people might say 4, but I just like using 3 because when I went back and studied the volume, you usually have the biggest spike in volume on the Dow Jones at 3 o'clock. So that's the reason I picked 3. So we'll go ahead and start from right there. So if we look at it, we come in at 3 o'clock, we are below yesterday's closing price. And that's pretty much as simple as you have to keep it. You're either below it or you're above it. If you're below it, it's a downtrend. If you're above it, it's an uptrend. Now, the amount that you're above or below yesterday's closing price determines how strong the uptrend or the downtrend may be that you're trading in. So let's go ahead, let's get right into it, and let's start charting up. So even though I started 3, if the price action at 3 doesn't represent a good place to start, I'll just go back to the most recent spot. So we can see that we started the downtrend up here from around 1:35 in the morning on this particular day, which is September 18th, 2021. So we had a nice downtrend and then we established a bottom. So let's go ahead and start charting up from right there at the bottom. Let's go ahead and draw a level of support right here. Really, we could actually make this into a zone because we have a clearly defined top and a clearly defined bottom. So we can just box that up, stretch that across, and then use that as a reference point throughout the rest of the session. Okay, let's make it green. Okay, cool. We have our zone boxed up. Now let's keep moving forward. So we broke out of the zone for a little bit, created a double top. Let's go ahead and mark that up. So when I go through these charts, basically what I'm doing is I'm looking to find every single last one of my setups, and I'm looking to find a understanding of the type of price action that was occurring throughout the pre-market. Because usually what happens in the pre-market has a very high chance of occurring again as the market opens for the New York Open at 9:30. So you always want to make sure you try and pay attention to every single detail in the market. So double tops for me, that's one of the setups that I definitely always look for. So we pushed back down into the zone, had one pullback, didn't really pull back to a major level, but we can go ahead and circle that up anyway. I like to put circles on pivot points in the market where you either have swing highs or swing lows. So since we're in a downtrend, we'll go ahead and mark up this swing low. So then we continue moving lower, we break out of the zone, come back, retest it. So anytime you retest the zone, I like to bring that across also. Ooh, hold on. Okay, there we go. All right, so to me, I call that a successful breakout of the zone, where you push down past the zone, break down below it, come back, retest the level that used to be previous support but should now act as resistance, and then we see prices move away. So to me, I would consider that a SBO, a successful breakout. So then we see prices find the bottom right here, push back into the zone, we find a higher low right here. So the same way I mark up my swing highs, I also mark up my swing lows. So when we have a higher low, we go ahead, mark that up with an ellipse. And usually I will put a level of support across. So I would draw support across the level for that higher low. And then I would use that for my higher low strategy, and I would look to go long as prices come back and retest that level. Now, it's not all the time that the higher low will give you a good level of support to go long from, but I would say like maybe 70% of the time, it'll usually come back and retest that higher low in some type of way, shape, or form. Either it's coming back to retest it and respect it, or it's coming back to retest it and actually violate it and keep moving past it. So then after that higher low, we break out of the zone, we see prices come back up. And if we were to draw a, could call it a level of resistance, but once it got broken through, becomes support. And also notice how, let's actually change the colors of these lines. I like green. All right, so also notice how we also had a very minor higher low right above the breakout past that high. So once we broke out past it, we came back to retest it on that one candle. And sometimes that's all you need. You know, sometimes the pullback might be a little bit deeper, but sometimes you can get that one candle like you see right here. So we continue pushing up, create another higher low on top of what used to be a previous level of resistance. So let's go ahead and mark that up. Notice how the previous swing high, once prices move past it, they usually have a tendency to come back and retest that level. So we see prices come back, get the retest, and eventually make their way up to yesterday's closing price. Now that's very important right there, because you'll see these types of moves not only in the pre-market but also when the market opens for regular time, because for whatever reason, like yesterday's closing price means a lot, not only to me as a trader on the 1 minute, but to every trader on every single time frame, because yesterday's closing price is the same for everybody no matter what time frame you trade. So it usually has a magnet type of effect, where if the prices are trending in that direction and you see them moving there, more than likely they'll probably end up reaching that level. Now, how they get there is always the $1 million question, because a lot of times it's not always a straight shot there. You know, it might come up there sometimes. There's been occasions where I saw prices come up, maybe get like 10 to 15 points away, pull back maybe 50 to 60 points, and then make another run at it and actually hit it on the second time. So moves up to yesterday's closing price and down back into yesterday's closing price are very common. So you always want to make sure you keep that in mind. And that's one of the biggest things I use when I'm trading. I like to use yesterday's closing price as like a reference point to know where I want to get in and where I potentially want to get out if I am trading in the direction of the trend. So once we hit yesterday's closing price, we create a lower high right here. So let's go ahead, circle that up. All right, and then from that point forward, we continue to make lower lows, lower highs, lower lows, and lower highs. So anytime you start to see consecutive series of lower lows and lower highs, that's pretty much telling you that you are in a downtrend for that specific moment. And how far the downtrend runs depends on how many lower lows and lower highs you get. You know, sometimes it can be maybe a series of 2 or 3 that'll just lead to a minor pullback, or it can be an extended entire run where we have 1, 2, 3, 4. So we had 4 lower lows and 4 lower highs before the move actually reversed and started moving up again. So this move is pretty considerable. So let's go ahead and break it down. Now, what I like to look for when I'm looking at a down move, I like to draw a level of resistance. Well, you could call it support really, because once it comes down into that level and finds demand, wherever prices bounce up from and create a green candle, that's pretty much where I draw my level of support at. I like to mark it up as red just to help me know that I'm using this as a level to go short from. So whenever prices come back up into and retest what used to be a previous support level, that's where I typically look to go long. Now, if you look at this particular function, we actually didn't come up and test too many previous lows. We tested it on this one where the low for this candle was 539. The high for this candle was 539. So that right there was a perfect test. So let's go ahead and mark that one up. Okay. So that's usually what I like to look for. You know, if the low was 539, what I've seen a lot is that usually prices will come up to 538, which is one tick below it, and then you'll see prices reverse from that point. So whenever you see that one tick rule start to happen, just keep that in mind, that that is a very bearish signal, especially when prices are coming back up to retest what used to be a previous low. So we see prices continue back down into the zone where they eventually do come back to retest that support level from the higher low that we were talking about from earlier. You know, sometimes a higher low can act as a major level or it can act as a minor level. In this situation, I would say it's more of a minor level because you had, you know, a small area of demand when prices came back down here that pushed prices back up to the top of the zone if you were looking to short it. And then you see prices continue down. So I would call that a minor level, but I would say a major level is an occasion where you come back down to the support level from the higher low and then you immediately move back higher. You might come back and retest it a couple more times, but it'll hold up. So that's what I call the difference between a major and a minor level. So once we finally come back to the bottom of the zone, we push back up, create a higher low. And what's interesting is that we created this higher low coming from the bottom of the zone at the same price level that we created a higher low inside of the zone a little bit from earlier. So a lot of times in the market, if you see higher lows get established on the same level of support, maybe, you know, however much time transpires between those, it just tells you that the buyers have intention. For whatever reason, we're seeing that buyers are coming in at these levels and pushing the market higher. So that doesn't necessarily tell us that we want to go long right now, but it's telling us that other people in the market are going long down here. So we should sit back and see if they can continue that move. And if they do, we can potentially look to get in. So in this scenario, we see prices push up, break above the zone. You could call this a higher low if you want to, call it a successful breakout. You know, it's not the best setup, but nonetheless, it does qualify. And one thing about it is that in the pre-market, you'll see all of your setups still start to form on the chart, but they might not be as large or as wide as you want them to be because trading is just a little bit slower in the pre-market. But you still mark those levels up because more than likely you'll see those types of setups form throughout the day. So you want to go ahead and get your practice in and get used to marking those up, because the last thing you want to do is get into a place and a mindset where you're complacent and you say, oh, okay, I know it's a higher low, I don't have to mark it up. Always mark up your charts and do the right thing. So once we see prices continue up, we establish another higher low right here. So we can go ahead, circle that up, draw our level of support across the lows for that higher low. And then as prices come back into that level, as long as the trend is up, we'll just look to go long and take prices back up to the next major level of resistance. Now, if we look above, we had a previous high from the market up here at these two double tops that we talked about right when the London session opened at around 315. So that would be our most logical level to take prices back to if we were to go long, as prices came back and retested this level of support right here. So let's continue moving on. So eventually we ended up finding resistance at this level from the previous double top. Now once we hit that level, we created a lower high right here. So let's go ahead, circle that up, and then let's take a look at what happened after that. So we pushed back into the zone. Really, we came back to retest this previous gap that got established at 438, because we actually never came back to fill that gap. And whenever there's a gap in the market, more than likely the market is coming back in one way, shape, or form to test that level. And that's exactly what we saw right here. So we found a little bit of support right there, but then we really just came back up to retest what used to be a previous higher low. And that's one thing about the higher low strategy. It can work for you on the upside as prices are moving up, but it can also work for you on the downside as prices come back through that level. It now can act as a level of resistance that you can use to go short from. So that can be the exact scenario that we looked at right here. We see prices come back up, retest it, and from that point forward, they push into the zone and create a lower high right here on this one little green candle. And sometimes that's all it takes. You know, there will be some swing lows and swing highs in the market that are really obvious. They might be a couple of candles long. It might be a little combination of different candles, but sometimes it'll just be that one candle that comes back, retest it, And then from that point forward, the down move is on. And that's exactly what we saw. So we eventually came back, broke out of the zone a little bit, came back and pretty much found resistance at the bottom of the zone where it used to be support, which makes sense. That's how the market should be moving. Okay. So as we continue moving forward, we see prices break down past the level of support that was established once we really found this low right here. So let's go ahead, mark that up. Since we are in a downtrend, we want to go ahead, make that level red, and then use that as a level to go short from if prices come back and retest it. So once we see prices break out, we see on this one candle, just like we talked about before on this candle right here, on this one candle, prices come back, they retest it, and from that point forward, they sell off. So let's go ahead, let's mark that up. Okay, cool, got it. Oh. So then eventually we found a bottom down here towards 414 and we closed at 425, which makes sense. That's a quarter level in the market, and quarter levels typically have a tendency to get tested very often in the market. People do a lot of business around those levels. Quarter levels and whole number levels and half number levels make a big difference. So then we eventually push up, we create a lower high, so we can go ahead, circle that up, take our trend line, draw it across those levels of support. And this is one of those scenarios where prices don't come back to retest the higher low. And sometimes you'll see that when it comes to this higher low strategy. But what you can do is whenever you don't have prices come back to retest the support level, what you can do instead is look to find the swing high. So in this scenario, the swing high was located right here. So let's go ahead, draw that up. And then notice how prices will come back to retest that swing high. So if you can't get the retest of the support level for the higher low, more than likely you'll be able to get a retest of that swing high. And if you can't get that, then sometimes you just got to sit it out and wait for better opportunities. Let's go ahead, let's mark that up. Boom, that counts as our higher low. So then we push up back to the major level of resistance that we established from before, where we sold off from originally, and then we pull back. We kind of came back to retest, you could say, this level of support from the higher low, but to me, if it doesn't come all the way back down to the lows of the wick, I don't really count that. So we eventually pushed up, tested the top of the zone again. Let's go ahead and extend that across. So we come back up, retest the zone. Now this is where this level of support really starts to come into play. So let's go ahead and move that across. There we go. Oh, I'm struggling. I got it though. There we go. All right. Now this is where this level of support starts to come back and play an actual major role. So we didn't actually hit it this time, so it didn't count. But once we came back and retested that level one more time and then found support right there, that validates the fact that this higher low and this level of what used to be a previous swing high makes a difference. So we know that that's important. So then once we see prices bounce off of that level, they come back, create another higher low. So if we had any doubts about whether or not it was an uptrend going on right there, we had everything that we needed to see. We had a strong reversal to the downside that ended with a high spike in volume, which represents exhaustion, which pretty much means that everybody that wants to sell has already done so. And after that exhaustion volume, we had a tweezer bottom reversal, push back up, created a higher low, pushed past the previous swing high, came back to retest it, found support right there, and kept moving. So after seeing all of those things, we know for sure that the trend is up. So that's where you start looking for those uptrends and then just looking to take it back up to the top of the zone. So we eventually end up coming back, hitting that level, and then we push all the way back down to retest this level of support once again. So let's go ahead and stretch that level across. Now when we came back down here this time, we kind of pushed down a little bit closer to this level down here. So let's stretch that across as well. And it creates more like a little small minor zone where you can look to go long from as prices come into that level. And if we actually take a deeper look at it, we have a double bottom that gets formed right here. So let's go ahead and mark that up. Very important. All right. And coming out of the coming out of the double bottom, we create a higher low right here. Now I would box that up, but it's kind of close to these circles and they'll probably just sit on top of each other. So we'll just say, look, we know that the circle is right there. So then we also push back up, create another higher low. So let's go ahead and circle that one up. So once we created that higher low, we pushed higher, really didn't come back to retest any levels of previous swing highs unless it happened while the candle was forming. And sometimes that can be the case, but there will be occasions where you just don't get the move because it didn't give you the retest that you was looking for. And that's okay. You never want to force any move in the market. You're not obligated to take any types of trades at all. Look for what's best for you. So then we see prices come back up, retest the top of the zone, and they eventually make their way back down to the first level from the higher low support. But then we create this lower high right here. And what's interesting is that if you follow this lower high across, it lines up with what used to be a previous swing low when we were on the way up in the market. And that's usually what happens. Anything that used to be a swing low should come back and get retested as a level of resistance once prices break to the downside, if they do. They don't always break to the downside. Sometimes the uptrend continues. But if they don't, we can go ahead and mark it up and use it as a level of resistance. So that tells us that the sellers are in control at that moment, but it doesn't necessarily tell us that we need to go short right then and there. It's just telling us that the sellers are taking over. So let's see what they can do, and let's decide later on based on what we see whether or not we want to get in and participate on that short move. So let's find the next swing low that gets created after this touch. So I would say the next swing low probably gets created once we come back to retest the higher low level number 1 right here, the support level. So we don't even have to mark that up because the line is already there. That's perfect. Now once we push past that, we came back to retest the level from this double bottom. All right, that's the area that we ended up at right here. But then we came back up to retest what used to be a previous swing low right here. So we can go ahead, clone this line, and create our next level of resistance that we want to potentially look to go short from during this downtrend. And we pretty much just want to do that all the way down as prices continue to move lower. And you continue to make your levels of resistance until you see a higher low get formed. So that's what we'll do. So our next level of support / resistance will be at this swing low right here. So let's go ahead and mark that up also. All right. Now, what's interesting in the market is that sometimes prices won't just come back to retest that previous low. As a matter of fact, they'll come back up and retest the swing high from that swing low, if that makes sense. So notice how in this scenario, yes, we did make a low right here, but then when prices pushed back up, the buyers had enough strength to get the market all the way back up to this level. So there will be occasions where prices don't come back to just retest that previous low, but they come back to retest the highest point that the buyers could push the market to, and then the sellers step in again. And that's exactly what we saw right here. Now, our next level of resistance will be at this low, this swing low that got established right here before we actually made that test. So let's go ahead and mark that up as well. All right, cool. So that would be the next level that we look to go short from as the downtrend continues. And look at what we see. As soon as we break past that level, we eventually come back up and retest it perfectly, and then the downtrend resumes. So we can pretty much say that we have our next level of, I would say our next swing low would be, see, it's kind of tricky. I would say it's either this candle or it would be this level. But since they're so close together, you can really just say that we could put the line in between those two and kind of average it out a little bit. All right, so okay, our next swing low right here. Now notice in this scenario, prices came back to retest the same level that prices pushed higher to when they made that last push to the upside, where they were able to find a little bit of support and a little bit of demand down there, which might have been people going long on higher time frames, or more than likely will probably be all of the short traders taking profit right there, or more than likely a combination of both of those factors. So notice we pushed back up, retested the wick, and that's very interesting too. Let's go back to this previous level of resistance that we were discussing before. Notice how on the first test we pushed up to test the bodies, right? Now we pushed down again, and then we pushed up right here, but look at where we came back to. Follow this to the left. We came back to test the wicks, and that's something that you'll see very often in the market too, where prices on the down move will come back to retest the body from that previous low, push down, and then come back to retest the wick from that previous low. And then once they find rejection at both of those points, that's when we know for sure that the selling is on, because buyers had an opportunity to break past that wick 2 times and were unable to do so because the sellers were so strong. So then we continue to push down and we create our next level of resistance down here at the swing low. So let's go ahead and mark that up. Okay. So notice once we hit this swing low, we pushed back up and came all the way back up to retest the previous level that the buyers were able to push the market up to when they were able to find some demand. So we're seeing that happen multiple times. We saw that happen the first time in the downtrend, and we also saw it happen on the second lower high that got established in the downtrend. And that's something that usually happens in the market pretty often too, which is if you see a trend happen in one way before, it's probably going to continue to happen that way on the way down, because more than likely whoever it was that was going short up here are probably the same people that are actually going short down here as well. So if it worked for them when they were doing it up here, they'll probably do it the same way down here. Not all the time, nothing is guaranteed in the market, but that's just something that I kind of picked up on a little bit. So we pushed back up to retest the previous level that the buyers could push it to. We got rejected from there again, and then we continued to move down, and we see the downtrend start to definitely pick up a little steam right here as we continue to move lower. And we eventually established our swing low down here. So let's go ahead and mark that up, draw our level of resistance across, and then use that as a reference point going forward to go short from. Now in this occasion, this was where the downtrend finally kind of started to lose steam, and we saw the buyers step in, not for a permanent amount of time, but just temporarily for a little minor pullback. So even though the downtrend was strong, we still respect all of those signals that we see on the chart. So when we see that double bottom, we draw it up, whether or not it's a downtrend where the market has dropped by 1,000 points or what, it doesn't matter. If you see it, you mark it up. So once we have our double bottom, we come back, we have a higher low that gets established right here. So we're starting to see the buyers kind of take over right here, not permanently for long, but temporarily. And because I'm a scalper and I'm in and out of the market, I'm only trying to get 20 to 30 points on most of my trades. So when the overall market characteristics change, it'll be really detrimental for me to keep trying to go short, especially when I see a double bottom plus a higher low. So this right here tells me that the market really wants to kind of turn around right here. So I respect all of my setups. When I see the higher low, I draw my level of support across it. Let's go ahead and make it green because we're looking to go long as prices come back into this level. So eventually they did do that. They came back to 31,370, and then we're able to push back up to this level of resistance up here at 388. Now that move was only 18 points, so I would have only been able to get maybe, if we're being realistic, maybe 14 to 15 out of it if I caught it at the right time. But usually in the pre-market, you won't necessarily get your profit targets hit like you would in the regular market, because it's just not as much activity, which is one of the biggest reasons why I prefer to just not trade in the pre-market unless I see something that's just so good that it has to be taken. So once prices came back to retest the higher low, they just simply pulled back to a level that used to be a major level of resistance. And sometimes that's what can that's what you can see happen when you have reversal patterns coming to the market. A reversal pattern like a double bottom and a higher low setup can either give you a uptrend that leads to prices coming back to reclaim all of these resistance levels, or it can just lead to a minor pullback that pushes prices higher to a major level of resistance above, and then that's when the downtrend continues. So that's what we saw in this scenario. We didn't see a reversal, we just saw a minor pullback up to a major level, and then the downtrend continued once we hit 31,390. So let's go ahead and continue our analysis from this wick right here once we touch that level. So we touched it and immediately came back and created a lower high. So notice how we came back to retest what used to be a higher low right here. We actually didn't draw that up, so let's make sure we do that, because those higher lows are very important. Because even though you might not be able to catch the higher low and use that on the way up, if the trend is strong to the downside, you can definitely use that higher low strategy on the way down. So now that we have that marked up, look how prices came back to retest that level. The low for this higher low right here is 31,376. The high for this candle right here is 31,375. So that goes back to that 1 wick rule I told you guys about earlier, where if prices are coming back up to retest that previous low, if they come 1 point within it and then get rejected, that's a very bearish sign, and that's something that you definitely want to look for when you're trading a downtrend. Now, it doesn't mean that if it comes back up and maybe it retests the exact same price and it's not just 1 wick below, it doesn't invalidate the move. But when you see that 1 tick difference, that makes a huge impact on the strength of the downtrend that will immediately follow after that. So once we get that lower high established, let's actually circle that up. Okay, we get the lower high established. We push down to the downside and create another level of resistance down here. Well, technically it's support, but we want to use it as a level of resistance if we break back down below it and continue to go lower as the market opens. So since this is the lowermost level of support that got established today, I want to go ahead and make it blue. That's how I like to color code my charts. Blue represents the lowest level of support that happened that day. The green represents a level of support that you want to go long from based off of a higher low. And then the red represents a level that you want to potentially short from as prices come back up to retest a previous swing low. So once we push down to these levels, we pushed back up and really came back to retest this wick right here. So notice how the low for this wick is 31,363. We came back up on this one candle right here and we came back to 31,361. Now that's an example of the 2 tick rule, where the sellers are so strong that they don't even let the market get within 2 ticks. Usually it'll be 1, but if you see a 2 tick rejection, that's an even stronger sign that the sellers are definitely in the market at that time period. And we saw prices move down after that, came back, retested this level. Now what's interesting is that if you were just glancing over these candles, you might miss the fact that there was a retest on this candle. Because notice how on this green candle before, we pushed up, created a lower high once we came back to retest that wick, right? So we sold off, and at one point this candle was completely red and almost came back down to the opening price for that green candle, but didn't quite make it. And when it didn't quite make it, buyers bought it up, pushed it all the way back up to retest these previous levels of what used to be support from the double bottom that are now acting as resistance, and then we saw prices continue to move down. So once we hit this level again, we created a double bottom right here where we had bottom number 1, bottom number 2, and actually it was a triple bottom because we had bottom number 3 right here. So let's go ahead and mark that up. Well, really it's a quadruple bottom because we have 1, 2, 3, and 4. So the more touches of a level of support, the more it means that there are buyers at that level, which means that you just need to be aware of what's going on. Hold on, I think I lost connection. Okay, let's wait for it to reload. Okay, there we go. Dang, where was I? They threw me off. Okay, yeah, so anytime prices come back to retest a major level of support multiple times, that tells you that the buyers are definitely down there. It doesn't mean that you just want to blindly go long at that level, but it does mean that you want to pay attention because the market is telling you what it wants to do and it's giving you the signs of it too. So you just got to pay attention and read it for what it is. Now I'm not going to draw up all 4 bottoms because the circles will kind of sit on top of each other. So I'm going to just put this one right here, but we know that it's 4 touches. So once we finally bounce off from that level, we come back, create you could call this a higher low right here. It's not the strongest higher low, but it's a higher low nonetheless. So let's go ahead and mark that up. Take our level of support, stretch that across. And now we are almost ready to start trading the market open for this day on September 18th, 2021. This is a back testing session, and remember that. It's 8:26. Okay, I'm gonna get off of here at 9 o'clock and get ready for the market. So we got 30 minutes. Now let's go ahead and check the checklist real quick. It's a couple of things on here that we'll have to skip because I gotta actually go back and do this in real time for today's session. It's September 6th and September 6th, 2023. So I want to make sure I don't rush too much. So we're going to have to skip a little bit of this, but we already found the closing price from the previous session, compared that price to the London session. It was down, so that means we were in a downtrend. Now you actually want to look at how many different trends occurred during the pre-market. Now I would actually change the wording on this and say how many different swings occurred during the trend that was going on during the pre-market, because it could have been an uptrend. Like, let's say, well, let's go back to today's chart. Notice how it was a downtrend, right? But look at the fact that we had a few different opportunities where there were swings to the upside. We had one swing to the upside at 330, another at 440, another at 610, and a slight one down here at 844. So that's what I mean when I say how many different swings occurred during that actual trend that you were looking at, because that tells you how strong the trend really was. If the trend is super strong, you'll probably have a consecutive series of either lower lows, or if it's an uptrend, you'll have higher lows, but you won't see too many strong pullbacks. So whenever you see different swings during the trend, it just tells you that, you know, it's opportunity on both sides. Now there is one side of the market that holds the majority, but you can make money going both ways, and that's why I like to ask that question and look at that right there. And then what is the trend going into the US Open? So if we look at what we see, not too hard to determine today. The trend going into the open is down because we're below yesterday's closing price. What volume bars are, and also just because we're below yesterday's closing price doesn't mean it's down. You just want to look at which way the market is moving before it opens, and that'll pretty much give you the answer to that question. And then what volume bars are significant? I go back and look at the volume bars a whole lot, because they tell you where all of the major levels of business were done in the market. So more than likely, if business was done there before, it'll probably get done there again if prices come back and retest those levels. But because we're in a little bit of a rush here, we're going to skip that today. But we'll get to that in some of our later back testing sessions when we have a little bit more time. So how were the tops and bottoms of each trend formed? That's very important too. You know, sometimes you can have sharp reversals like what we had right here, where you have a smooth pullback, comes back up, it retests that level, and then it immediately continues to do what it was doing before. Just had a little minor pullback, right? But then you could also have scenarios like these where you had a real pullback, where you had a double bottom that got formed and a higher low. So we see that the market characteristics change dramatically right there, and then eventually push back up to a level of resistance, and then that's when the sellers start to step back in and push the market down. So you always want to take into account what the tops and bottoms were like, because more than likely the same way that the tops and bottoms were formed in the pre-market will probably be a very similar way that they get formed once the market opens. So you always want to keep that in mind. And then what were the characteristics of the pullback? So that kind of ties into, you know, what you were looking for this previous question, thinking about how the tops and bottoms were formed. And then you want to look at the characteristics. Now when I say characteristics, basically I just mean, like, how do I describe it? Was it passive or was it violent? You know, a passive pullback will be something that's more of a stair-step ladder. It's hard to really find it on today's chart. But a violent pullback would be something like what I talked about earlier, right here, where you get to a level of what is support down here at 31,405, and then it's a violent move about 30 points higher in the next, you know, 5 to 6 minutes back up to that major level of resistance. So that's what I mean when I say what were the characteristics of the pullback. So since we have all of these things taken care of, now we are ready to go ahead and start trading. So let's bring this up. I like to make it as realistic as possible, so I'm not going to trade 5 contracts. I'm trading 1, just like I do in real life. All right, full screen. Now what I like to do, I put it on 3 times the speed, because when you run it on normal speed, it'll give you almost a carbon copy example of what you would see in real life, but it just takes too much time. And what I've learned is that if you do it on 3 times the speed, you can do way more sessions and you can get way more work in. So I like to do it on 3 times the speed, because not only do you get way more work in, it also forces you to make the best decisions, because when the market is moving like that, Like, you can imagine how fast the market moves in a normal session. Now you sped it up to 3 times that. You'll really have to make the right decisions. You can't hesitate. If you see your move and you see your setup, you got to take it. So that's why I like to do 3 times the speed. But I don't trade the first 10 minutes when the market opens. I like to just sit back, see what the trend is, and then after the first 10, I'll get to it. So without further ado, let's go ahead and get right into this session that we're backtesting today. So let's see what happens as the market opens, and let's just sit back and let's observe. All right, so we're seeing prices come back to retest that support level for the higher low. Now, when the market opens, the reason I don't like to trade is because anything can happen. Sometimes the market respects the price action that's going in front of it. Like, if everything holds up, the market should move higher right here. But there have been times where the market will just do whatever it wants to because there's such a large influx of orders coming through that it's going to push prices whichever way the majority of orders are sitting at. So even though you might see your bullish setup, you don't know if it's 1,000 sell orders on the other side at 9:30 for people that are looking to, do business when the market opens. So always keep that in mind. You see how right here when the market opened, it really pushed both ways. It gave you an opportunity to see that setup work when prices push back up to this level of resistance that came from a previous higher low, but it also pushed to the downside and would have wicked you out if you weren't careful. So that's why I always say you got to be careful when it comes to the open. And that's why I like to give it 10 minutes. Just, give it a cool down period. Let me see which way it wants to go. And then that's when I decide to start operating. Okay, so we see prices came back. They retested what used to be a previous level of support. So that's a good thing. That's telling us that the sellers who were in control in the pre-market are still around. So now that they've retested that level, let's see if they can create a new lower high after this. Because just because you see a retest doesn't necessarily mean you want to short, because, and I only say that when you're at the lowest level that prices made for that entire day so far. Sometimes prices will look like they want to continue, but then they'll just all of a sudden reverse, and you might see an uptrend start from here, especially when the market is open, when the market is first opening in the pre-market. So always keep in mind that the trend could reverse right here. So you don't necessarily want to just short automatically. You want to wait for that confirmation. And since we made a swing low right there, let's go ahead and mark that up. Let's make it, it should be blue because it's the lowest one of the day, but because we have a blue line already up here, we can just go ahead and draw our red level here and use this as a level of resistance if prices are able to break back down through it as the market continues to move on. But this is what I mean when I say you got to be careful at the open. It made it seem as though the market wanted to continue down, and then it hit you with all of this bullish momentum back to the upside to retest this previous level of resistance that made a major difference in the pre-market. So now we need to see if this level is going to make a difference as prices come back into it again. Is it going to hold up as resistance, or are the buyers going to have enough momentum to actually push through it? So that's what we need to see right here. Now right here we have a potential higher low starting to form. So let's go ahead and just draw the circle up so we can be ready if it does close as a higher low and a green candle. Okay, so it didn't close as a higher low. So that's telling us that the sellers are still in control right now. So let's see how the market wants to move going forward from here. Now this blue level down here is very important because it acted as the lowest level that prices were able to respect. So now that we've actually been able to break back down through that level again, that tells us that the sellers are definitely strong. So now we should be expecting the sellers to come back, retest this level of resistance, and then sell off. Now we're seeing them come back to retest this level, but they're not getting rejected. So it's not necessarily time to short just yet. But since it's 9:40, let's pause it real quick. Let's bring up our trading panel, and then let's go ahead and rezone. Okay, so it looks like that might be the retest right there on that candle. Notice how it opened slightly below these wicks, but it did come back to retest that level. And sometimes when the trend is really strong, you'll just get that one retest on one wick. Now let's see. Now, I do like to pause the simulation when I'm in the process of thinking about a trade because it is on 3 times the speed. So I just like to sit here and just say, if I was in the market at this time, would I go short? And let's actually analyze what we're looking at to see if that's something that we would want to do. Now, the low for this previous candle right here, where we established the swing low, is 31,304. So we came back to retest that level on this candle right here, and we came back to a high of 31,309. But then we actually opened this candle at 303 and closed at 289. So it's very bearish right there. And then on this candle, we come back up. We had a high of 306. So now that we're moving away after touching 306, we're at 297. If this was real life, I would short it. So I would go ahead and just place my sell order at, let's just put it at 98. We don't want to get in at the market because if you pause it and then get in, I feel like that's just not as realistic as it could be in real life. In real life, I will put my orders on the chart and wait for them to come back and get hit. So that's what I'll do in the simulator to try and just keep it as close to, the actual thing as we can, because that's the purpose of practice. You want to do everything you can to make it a dress rehearsal of the real thing. So we always want to make sure we put our stops in the market. So I like to use a 15-point stop. So for me, you take 98, you add 15, you should get 13. So if our order gets filled, we'll come back and we'll put that stop loss in there. All right, order got filled. So what we want to do is go ahead, put our stop loss in there, and then look for our profit target. Now, my profit target is usually a scalp target of about 20 points. My first trade of the day, first trade of this session. So I want to make sure that, I just take my scalp target and get out of there. So we'll do 21 points, not too far away from the quarter level at 25. So that should be a decent area where we could potentially take profits from. Okay, I think we should be good. And let's see how this plays out. Now, the only thing that's concerning me is the fact that this could be a potential tweezer bottom down here. But because the downtrend is strong, we see prices coming back up to retest previous levels of resistance. We want to look to go short right here. So let's see how it plays out. Not looking good so far. Okay, so we would have got stopped out on that trade. So let's analyze it and let's see exactly what went wrong. I would say one of the rules that pops out, the first thing is not taking the second setup when it comes to not taking the second opportunity when it comes to trading your setup. Usually the first opportunity is the best one because you have the most amount of people participating at that time. So the best opportunity to get in for this short would have been on this red candle right here when it came back to retest it. So getting in on the second retest is not the most lucrative opportunity when it comes to actually taking your setup, and that's the lesson learned right there. So let's continue moving on and let's look for some better opportunities. So now we've come back up to retest the previous lowest level of support that we established in the pre-market, and that's acting as resistance for right now, but let's see if prices can stay below that. Okay, we're coming back to retest what used to be a swing low. It looks like we might make a higher low right here. Let's see how this candle closes. It's looking like it wants to close that way. So we can go ahead and drag our circle over here and get ready for the close to be a higher low. And as soon as prices come back to retest the support level of your higher low, you look to go long. Now everything pretty much lines up for that strategy. We have a strong move to the downside that broke past support, But once we broke past support, we shot down for a little bit, but then immediately made our way back up to that level and created a higher low right below the lowest level of the day from the pre-market. So more than likely, that usually leads to a situation where buyers have enough momentum to push prices higher. So if we get in and look to place our order down here towards the support levels of the higher low, we can either look to take it up to this support level from before at 335 or the next level up above at 350. So knowing me, I'll probably aim for 335 and then see what we can get if prices continue to move higher after that. So let's go ahead and put our order in. Let's see, the low for this candle is 31,303. So I would like to put my order about 3 ticks above it at 306. And then let's see how that plays out. Now, if we get our order filled, I'll come back and put my stop and my limit. But remember what I talked about earlier. If prices never do come back to retest that higher low, you simply just figure out where the swing high was, which is right here at the top of this wick. And then if prices break above that, come back and retest it, then we'll go long. But only if they break above it. You know, we're still aiming for that higher low to get retested first before we start looking to go long on a recess of the swing high. Also make sure we take into account the bigger picture. The trend is definitely strong to the downside, but we do have a higher low right here, so we want to trade what's in front of us, and when the downtrend continues, we can get back on that. All right, cool. So now that we've closed above the previous swing high, we should see that level come back and act as a level of support. So what I'm going to do is I'm going to put an order right there. Since the high for this candle is 343, I'll put an order at 345. Now I would say that this is a little bit risky because when you're buying that higher low as prices come back to retest it, I would say it works pretty often, but not as often as that retest of the higher low. So this order is a little bit riskier, but when you see that the trend is up, you just got to trade in line with it. So that's what we'll do. So let's delete this order down here from the higher low and move it up to 340, set 45, right? The high is 343, so yeah, 45. But I'm gonna do 46 just to be a little bit aggressive. And we'll put our limit and our stop in if the order gets filled. All right, order got filled. Let's pause it real quick and put our orders in. So our limit, let's see, let's find the next major level that prices should come back up to. I like this wick right here at 372. Also the top of the swing from before at 381. So I'll just go with 72 first, and if it makes it up to that level, we'll see if we want to get back in if things look decent. So let's go ahead, put it at 372. Our stop. So our stop should be 331, 15 points away. Oops, too far. All right, cool. All right, so we're good to go. If we look at our stop and look at where it's placed at, if prices are able to make their way back down here, then we definitely don't want to be in this at all. So let's go ahead, move forward, and see how this goes. Okay, so let's analyze that trade. We got stopped out right there and prices came back down to 31, which is interesting because that's what I mean when I say going long off of that higher low level. Well, excuse me, off of the swing high coming back to get retested. It's tricky because you don't know how many other people really want to participate in that move with you. So you're always taking a chance by going long right there. And that's pretty much the lesson that I learned right there. Like, hey, it's riskier to go high, to go long off of that swing high compared to going long off of that retest from the support level from the initial higher low that got established. But let's see if prices break back above that level though. Because usually if prices spike back through your original entry price, you just take that same trade again. Okay, it's cool. So they actually have, so let's put the same order back in. Now that's something that usually made me nervous at first when I first started doing that, but just from studying my own trading results, I've learned that if I get stopped out really quick and prices spike back up through my entry price, and if I thought I was in a good trade before and I just felt like I got stopped out because it was a stop run, it just makes more sense to get back in if I see the momentum starting to flood the market. That's kind of what we saw right here, especially with this high volume candle on this wick that got established. Let's see if we can catch 47 one more time. We might not be able to get it because it looks like momentum kind of rolled in a little bit, but we actually did get filled. Let's go ahead, put our limit back at 72 where we had it from before. All right, and let's see what this does. So it's interesting to see how prices are kind of playing out right here. You know the trend is up because we have a tweezer bottom and then a higher low. And then you could really maybe call this a higher low, but I wouldn't say that it's as strong as higher low because of all of the wicks that's going on. The wicks are showing us that it's indecision. But since the overall trend preceding these wicks was up, we just want to still lean towards the long side until we see that first lower high get established. So until we see a lower high, we just stick to the downside. Stick to the upside. Now let's see what it does. It's pretty much having trouble breaking past these wicks at the top side, which makes sense because if we look at where that's at a previous level that used to be a higher low that is now acting as resistance. So let's see how this plays out. All right, so that trade got stopped out too. So just like in real life, on the simulator, if you take 3 trades in a row that are all losses and you feel like you're out of rhythm with the market, that's where you want to call it and that's where you want to stop. But let's continue to just push forward a little bit. Let's move about 30 minutes into the future and actually see how this played out. Very interesting, very interesting. So notice how the whole time when I was trying to go long based off of that swing high right here, I should have really just kept my order where I originally had it at the level of support for that swing low. For that higher low that got established, because when prices come back down to that level, they do have a tendency to respect that level and see a move of support kind of originate from down there. And that's exactly what we saw. So I think the biggest lesson to learn right here is notice how when I took that first trade, I was like, this is a little bit risky, but I'm going to take it anyway. That's where you want to use your mindset of abundance. And I think I talked about this on a trade review video from yesterday. I'm going to link that down in the description. But I pretty much was like, look, it's going to be setups all throughout the market all day long, but only take the ones that resonate with you the most and that really align with your trading plan the most, because market opportunity is abundant all day. So if this setup isn't exactly as perfect as you want it to be, just let it go. So when I had that thought that, oh man, this one is a little bit riskier trading from the highs of the swing than it would be trading from the lows of the swing, that's where I should have said, you know what, I'm going to let that trade go, and then I'm going to wait for the next best opportunity, the one that just sticks out to me and is so obvious that I have to take it. So that's the lesson learned right there. Be patient and wait for your setups to form. And I think that's one of the biggest lessons I learned throughout today's practice session. So I think, I'm going to call it a day right there. But that should help me out a lot going into today's live session, because the reason I like to do these practice sessions in the morning is because if I didn't do this session right now, these same mistakes that I made right here, I would have made that in real life when I started trading at 9:30 when the market opened today. So I like to get on the simulator, and if I have any bad trades in me, let me go ahead and get those out of the way, take notes on them, and study exactly what I did wrong so that I don't make the same mistakes going forward into the live market session that I'll be trading for that day. So that's pretty much all I got. Today is episode 1. I just wanted to come and touch bases and start this new video series with you guys. I appreciate you for tuning in. I'll be back at 9:30 a little bit later this morning, and then we'll get the live session going, and we'll see if we can't clean up these mistakes that we made today. So let's go ahead and get into it. You guys take a little quick break, and I'll be back in about 40 minutes. But until